Hi everyone, this is Cherry Chen, your real estate accountant, here again with the latest on the federal budget 2021. Today, I'm going to share with you the top 3 measures that would affect real estate investors. Before I go into the details, make sure you subscribe to our channel so you would be able to get the latest tax tips update. And if you like the video, make sure you give us a thumbs up. And if you have any questions, please leave your comment in the comment section and I will personally get back to you. So the federal government released their budget for 2021 earlier this week. It has been 2 years since they released their last budget. Everyone in Canada is anxious to see how they are going to take control of this housing market, how they are going to generate income to cover all the spending that they incurred last year. And so we as real estate investors are also very anxious because there are headlines like this speculating that there would be more taxes for owning real estate investment, speculating that even owning your own home would cost more money because eventually they are going to tax us on selling our own home. So the number one thing that real estate investors should pay attention to is that there is no increase in the capital gain inclusion rate. What does that really mean? So capital gain normally is only 50% taxable. Now, using an example to explain, if you buy a property for $500,000, rent it out for a few years and sell it for, say, $600,000, the $100,000 difference, the $100,000 profit that you make is considered capital gain. And if you earn capital gain only 50% of the amount, so only $50,000 in my example, is considered taxable. The rumor was that instead of taxing you 50% of the profit that you make, that 50% would be increased to maybe 60%, 75%, or even 100%. Nobody knows. The reason why there was such a speculation was because the government has been spending crazy on the amount of COVID measures putting out there to stimulate the economy. So the speculation is that the government needs to find a source of income to lower the amounts of deficit because we have over $300 billion of deficit incurred just for 2020 alone. So this is the reason why there was a speculation that the government is targeting real estate investor or anyone that invests for long-term purpose to increase their revenue. And the good news is there is no increase in the capital gain inclusion rate. So great news. Second great news is that there is no primary residence tax. Currently, when you purchase your primary residence and you live there, and assuming that you own it for the longest time and you live there and everything you do complies with the primary residence exemption rule, when we sell your home for a capital gain, there is no tax. And presumably, primary residence, owning your primary residence is the biggest tax-free asset you can have in Canada. So there was a speculation before the federal budget release that government is going to impose a capital gain tax on the sale of primary residence just so that they could increase their top line revenue and they can spend more. And the good news is there is no such thing as primary residence tax yet. The last one, the third one, is not a tax measure. Rather, it's a benefit for real estate investors who are going to renovate their rental properties, is that there is a newly announced $40,000 interest-free renovation loan. So this $40,000 loan is available for homeowners and landlords that are trying to retrofit their house in an environmental friendly manner. So for example, if you are spending money on replacing your low efficiency furnace with a high efficiency furnace, if you're replacing the windows with a good window, leaking window with good window, if you are also insulating your basement unit, which all of us would do when we convert our basement unit into legal secondary suite, if you are doing new insulation, once you go through the energy guide test and you comply with the rule, you would then also be able to qualify for the loan. And this is an interest-free only loan, and you would be able to get it through CMHC. The program will start summer of 2021. Now, those are the top 3 federal budget measures that a real estate investor should not miss. Of course, there are tons more. The extension of the COVID-19 measure, there's the HST rebate, there is a bunch of other measures available. But today we cover the 3 most important ones as real estate investors in Canada. If you like what we share, make sure you hit the subscribe button below and make sure you also give us a thumbs up in our video. And if you want to share this, make sure you hit the share button, spread the news, spread with your friends. Until next time, thank you so much.